Welcome back to the Dream 80 series. This week we're going to talk about everybody's favorite topic of money and how to finance it, how to make it work. It's usually the hardest thing when we're dealing with clients or personal transactions or any of that. You got to figure out how to pay for it. The dream is to own the ground, to live on it, to hunt on it, to farm it, but you got to figure out how to pay for it. Very important topic that doesn't get brought up enough. So we thought it would be a very great topic on how to afford it, how to pay for it, and what the financing terms mean along the way. So with this property, like I said, it was listed for $6,000 an acre. We established that we knew that was a great deal on the property in the current market, and we offered $5,800 an acre for the 80 acres, coming to a full purchase price of $464,000. Now, when you look at financing of a property of this nature, there's three main types. There's other types, but the three main types are going to be cash, paying for it with taxed money that you have on hand, contract for deed, which is like a land contract or a contract that's held by the current landowner that owns the property, more than likely free and clear. They're going to give you a contract, and depending on the state, they may or may not retain the deed, but it's a contract for purchase where you're going to take the property and use it as your own intentions, but they're going to be the bank on the property for easy explanation. In some states, they may or may not transfer the deed to their name and then give you a contract, but a contract for deed, the easiest way to think about it is the seller being the bank. And third option would be actually going to a bank and getting some type of financing for the property. So with this property, we chose to do a conventional loan, and a conventional loan is usually going to be 25% down, and then the bank is going to give you 75% loan to value, LTV, of the purchase price. So they're going to give you 75% of the purchase price. You're going to come up with 25% equity to put down, and the 25% is reducing the bank's risk to give you the loan on the property. So 25% down would be $116,000. Now, you can come up with that usually in about three different ways as well. Again, other topics here, other ways that you can come up with 25% down, but the main three that we see are cash, that you have taxed money that you have from income or from the sale of another property, and you have cash that you can put down 25%. Also, two other things that banks don't bring up on a regular basis, or that are other opportunities in contract for deed purchase or different types of financing purchases, are equity and other real estate. So let's say you own 50 or 100 or 5,000 acres, or a home or a commercial building for your office, or a industrial building, a storage facility, anything that you might already own. You can take the collateral out of that asset and collateralize that asset's increase in equity that you have as equity as the down payment on this farm. So let's say that you own another piece of land, or you have a home is usually the one that we see the most. Let's say you have a $400,000 home and you owe $200,000 on it. You can take out a home equity line of credit or other financing opportunities to collateralize that asset, reduce the amount of down payment that you need on the next purchase, and put that debt on that first property that you own and already have equity in. The third option that you can do is collateralize some piece of equipment. We've seen people collateralize bulldozers or combines or pieces of equipment or even vehicles that they have paid off, and ask the bank if that would be an option to collateralize those assets to help out with the down payment or to cover that down payment. And in the event you default on the loan, they would get those assets as well. But it is another creative way that we've seen folks buy land that don't have 25% down in cash. Cash, equity out of another piece of real estate, or equipment or vehicles or other tangible assets that the bank is willing to take as collateral to go towards that 25%. In this case, we came up with the 25% down, which is $116,000 in cash or collateral, doing a loan at 75% loan to value at a 3.75% interest rate on a 25-year amortization schedule. The property taxes can be found on any county assessor's website, or if you call the county and ask the assessor what the property taxes are on the property. They were $416 annually on this 80 acres. Insurance was about $400, so it brings our entire payment to $1,857.18 per month. So from that, you have principal and interest, P&I. So interest is going to be $1,087.50 per month, and out of that, you're going to have a principal reduction of $701.68 per month. So that means out of your $464,000, you've reduced your loan amount to from $464 down $116,000, and then every single payment you make, you are knocking down another $701.68. So after you've made payments, a big topic on this video is going to be folks that say, well, if I want to do this today, interest rates are 5, 6, 7, 8, 10%. They've gone up in interest. The Federal Reserve has raised the interest rate price, which is make the local lenders and lenders that are going to do land financing increase. So if interest rates have increased, you have the opportunity to purchase at the interest rate that you can get. However, in the event interest rates go down in the future, you can refinance down to a lower interest rate if and when they go back down. So when they do that, if you've made payments of $701.68, on the principal side, the refinanced amount down the road would be at a lower principal balance. So I hope that makes sense. We have $464, down payment of $116, and then principal reduction out of your $1,800 a month payment, $1,857.18 of $701. That $701 principal reduction every single month makes your loan balance smaller. So when you go to refinance that, you're going to have more equity in the property. What I want to finish the video with is how to pay for the payment of $1,857.18. You got to come up with $1,850 a month. How to pay for it? You could, on this property, the example was we have about $50,000 to $100,000 in harvestable timber. Timber offers a very unique opportunity to use a Form T on your taxes for a basis reduction. So if you harvest timber, a T form could reduce the basis in the farm that you have of your purchase price of $464, much like depreciating buildings or drain tile. In land, if you take the timber off of the property and you have an established Form T, which has an established timber value from a forester on there, if you take off that $50,000 or $100,000, it can be tax deferred by reducing your basis. And if your plan is to 1031 exchange into another property, that basis is going to carry forward. So it can be viewed as tax-free for now income. Well, if you harvest $50,000 in timber, how many monthly payments is that going to make on the farm? Or if you have the monthly payments from other types of income that you have, can you do a principal reduction payment? Or third option, use that timber harvest to go towards another property in the down payment of that property. So on the property, to get back on schedule, you have other opportunities of CRP income, leasing out the hunting rights via turkey hunting, deer hunting, shotgun 1, shotgun 2, archery season. You might not want to do that, but if that's going to be the way that you are going to be able to afford the property, that might be something that you're interested in until you get on your feet of being able to afford the entire payment by yourself. You could lease out the crop ground, or you could lease out a cabin, a home, or a building that might be on that property to help offset that payment as well. So that's a little bit about the money, about the financing on land, about the options of how we see folks collateralize assets or come up with creative contract for deed purchase options on land. We hope you are enjoying this land series on the Dream 80. Be sure to like and comment on the videos if you're enjoying what we're doing here. We appreciate you watching every week.